If you could give me your name and job title, please, Simon.
Simon French, Chief Economist and Head of Research at Panmure Liberum.
So you were talking at the Investor Summit today with the keynote speech. Summarise the keynote speech for me. What were you talking about today?
Well, it was really to give the bull case for investing in the UK. The UK has managed to get itself, in recent years, a bit of a bad rep. But I think sometimes that is reflective of perhaps the media's desire for negativity. What I tried to do in the keynote was provide a bit more of an evidence-based, data-driven, more balanced assessment on some of the real strengths that the UK has, and one of the reasons why actually I think a lot of value sits within investing in the UK but has been masked by some of the negative headlines associated with the pandemic, with Brexit and the fallout from the global financial crisis.
So what are the strengths as you see them?
Well, so I think there are probably three. There is the intellectual property that comes out of both our university and our innovation culture. And that as a steady pipeline of value creation is probably the most attractive things for investors. Secondly, it's those pre-existing assets which, as a result of those optics of Brexit, of the pandemic, are at a very keen valuation to equivalent assets in the United States or in Europe. And the third one is actually some of the stuff that the UK has, which has impaired its growth performance. If you think of energy, if you think of housing, I'm not suggesting they're easy to address, but there are paths in terms of policy to build more houses, to generate more energy. They're the type of things that with a policy shift could actually get the UK back on the front foot in terms of its growth profile and returns for investors.
So what are the issues with energy, with housing and with Brexit? What problems have those caused?
Well, Brexit was very much a transition to a different regulatory and political order with no clear upside. I'm not suggesting there were no upsides at all. There are clearly some upsides in terms of tariff differentiation with the European Union and negotiations with Donald Trump. But in aggregate, most investors looked at this period post-2016 and said the UK is going to be distracted from its core mission of growing the economy and spreading well-being and wealth, and it's going to be focusing on effectively reproducing the regulatory order that it had been in for 40 years. And for that reason, they expected lower returns, they marked down valuations. I think we're through that, so in terms of Brexit, you're starting to see some of that Brexit-related discount come off. Secondly, on energy comes up time and time again when I talk to investors. The UK paradoxically imports about a quarter of its gas requirements in liquefied natural gas, with 4 times the carbon footprint of gas if it would be taken out of the North Sea basin. That seems nonsensical to investors, and they're going, well, if this is symptomatic of both the cost environment the businesses have to operate in, but also symptomatic of not making rational decisions regarding hydrocarbons and energy, such a key part of the new economy, data centres and AI, then we're reading that as a negative on the UK. And thirdly, on housing, one of the charts I showed in my presentation was that sucking in of capital into residential housing because of a lack of planning permissions, a lack of building over many governments over many decades. And that starved capital out of the equity market and out of pensions. And I think if you start to sort the housing market out and get a better balance between supply and demand, you start to see that capital going back into what are arguably better places for returns for investors.
Okay, UK stock markets, to the point you made, UK stock markets are undervalued.
Yep.
Cash outflows have been happening from UK stocks for many months. How do we resolve that? What are the solutions?
Well, this government and the previous government have twigged that pension reform and ISA reform are part of that. Incentivising, nudging, cajoling, regulating, what looks to me like a very sensible thing for the government and the country to have done over the last 30, 40 years, which is reduce the home bias of allocation. But I think most people, and I showed in the presentation the data points, most people think that the UK has gone too far and is now the only major economy to be underweight its own market. That seems irrational given that every other major economy is overweight its own market. So some reversal on that journey through any of those policy levers I describe, either incentives or indeed in terms of nudging, that is probably the route back to getting inflows, and then a revaluation cycle on UK assets.
So at the Investor Summit, we're joined by professional investors, we're joined by retail investors. How can both those distinct sets, how can we bring those two sets together a bit more perhaps, and how can we actually kickstart that UK market?
I think there's a responsibility on my industry, the financial services industry, the broking industry, to tell a story not just to the institutional investor but also to the retail investor. Now we need the FCA, we need the regulatory body to play along with that, to allow information, high quality information to be given to retail investors, else they will look elsewhere in less regulated spheres, in less informed spheres, more speculation, less investment. And that it won't be a great outcome on a medium-term view for investors. So in terms of bringing it together, I think it does need the FCA to recognise the price discovery increasingly is made by retail investors and less by institutions who are moving to more of a passive allocation model. And therefore, if we're looking for healthy price discovery, which as an economist is really important in getting capital to the most efficient, most innovative companies, we need to facilitate retail investors to feel more confident about getting information, making informed decisions, and to some extent, more confident about buying British.
Okay, final question. If you could summarise your presentation for us today, perhaps give us your outlook for the UK economy and UK equities. We're not the basket case that some make us out, so what do you think we actually are?
Well, to summarise my presentation, it was cup half full. Not cup overflowing, but half full. And I feel the market failure, to choose an economic term, is we've become too pessimistic about the outlook for the UK. A lot of our challenges are faced by all our major trading partners, including the US, including in Europe, including in China and Japan. And to some extent, what I think I was trying to get across is when you benchmark a lot of the UK data points economically in markets, we sit much more in the middle of the pack. That cup half full perspective can have really positive implications for businesses' propensity to invest and put capital to work, and for getting the stock market moving in terms of getting capital moving around the economy and getting growth back. Because ultimately, if you think about the thing that all 65 million Britons care about, which is probably growth and wages and well-being, that does stem from businesses having access capital to innovate, to become more productive, to generate wealth over the long term.
Being in the middle of the pack in terms of a highly competitive G7, it's not a bad place to be.
It's not a bad place to be at all. I'd love to be top of every league table, but the reality is too often I see us suggesting we're at the bottom of every league table. That's not my analysis. My analysis is we're in the middle. We've had some outsized shocks, and I mentioned them earlier in terms of the pandemic, in terms of Brexit, in terms of the fallout from the global financial crisis. But actually, despite all of that, UK GDP on a per capita basis and on an aggregate basis has middled its way through. There's the opportunity set. If we can avoid some of those crises, some people call polycrises, for a few years, actually the ability to move up towards the top of that league table is well within the UK's reach.
Simon French, Chief Economist at Panmure Liberum, thank you very much for joining us at the Investor Summit today.
Thank you, Donald. Cheers.